This next one's for both of you. It's sort of it ties into a bit with Asia, Europe, and Transpac really. We've been covering it a fair bit on the Freight Buyers Club. Um, what we've seen this year on container shipping is relatively, as I was mentioning earlier, stagnant volumes on the into and out of the US, whatever the trade. But we've seen exports from Asia into other markets, sort of South America, into West Africa, into Europe as well. They've been growing. Mark, maybe you can go first on this one. Have your customers been shipping more product to these other markets? Has that been something that's happened as maybe the US has become less attractive, or I don't know what the fundamentals behind it are. It's what we're clearly seeing on the container side, as we can show you on screen shortly.
Yes, absolutely. I mean, we talked before about friendshoring or diversifying away from China. So that's been part of it, right? We'll be manufacturing in a new location somewhere else in the world. We'll still have to ship parts and materials to that new location. So definitely, when you look at Asia to LATAM, that's been a big change. Asia to Mexico, we've seen a big increase from our shippers, and then in China to Europe. Obviously that we'll see what happens long term there. And I know the numbers indicate that trade down as well, but some of that supply that was going to the US from Chinese vendors are now looking to sell that into Europe. And so we're seeing some increases there for sure. So in the end, carriers are going to have to look at how they deploy capacity where it makes most sense. Once we've come out of this contract season, we'll probably see some routings change, some alterations that will make things unstable again for certain shippers, but will be beneficial to others.
Look, Chantal, these high growth rates of volumes out of China, particularly, but out of Asia in general, into these alternative destinations, the US's. I mean, what do you make of it? Is this long term? Is this people selling where they can because of uncertainty in the US?
I think, we have had the impact of tariffs. We can see that China in particular has tried to diversify with its partners on its certain trade lanes, and it has been chasing those. I think on the other side of the coin, we do know that shippers are looking at other locations because they need to de-risk their manufacturing as well. So I think this will continue to happen. I think, growth with countries such as West Africa, it's a big growth number, like 35%, I think, 24 versus 25 for the first 8 months of the year. But you have to look at the absolute TU number. It's much, much smaller. So when we talk about carrier strategy, they also have to look at that. So they can't chase the big 35% when, 10 million TU is still being moved from Asia to West Coast, North America. They still need to serve that trade. So I think we will see shifts, but I'm not sure we will see massive TU volume shifts over the course of 26. You'll see growth, but you won't see the big sort of manufacturing shift. Because if I'm honest, I just don't think the infrastructure is there in some of those other countries anyway, if you're talking about imports into the US. And then I think for China, it's, who's got the demand for their goods. And I think it's a very different profile to their traditional partners.
Mark, on that idea of de-risking sourcing, are you finding that a lot of your clients are your members are really they've changed their strategy this year, or is there just been too much uncertainty to make long-term plans?
No, it's definitely, but it started before this year. I think that the writing's been on the wall for a while. It's maybe accelerated this year, but we'll go into next year as well. We'll continue to build on this. There will be some diversification away from China, regardless of whether there's a deal now or not. That's going to happen.